Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money Market Wrap, where we talk about the biggest moves in the markets this week and what is driving them. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Wealth.
And I'm John Stepek, senior reporter and author of the Money Distilled newsletter.
John, we're going to go on holiday soon, aren't we?
Thank the Lord.
I know, finally time. So before we head off to, rainy Scottish Islands and that kind of muck, we're going to talk about the thing that we know our listeners are mainly interested in. Yes, it is house prices.
Hooray!
You wrote about house prices this week, John. It's not going that well, is it?
It was
Well, depends how you look at it, right? Depends how you look at
yeah.
it. Do you want them to go up? Do you want them to go down?
It was interesting because this week Rightmove came out, and Rightmove does asking prices. And I've got to admit, I can't help but take that with a pinch of salt, because obviously it's very early data. It's also fueled off people's kind of anchoring bias, and it's always the first price. You don't get the newly listed ones that have had price reductions included. But actually, if you look at the trend, although the asking prices are obviously a lot higher than the achieved prices, the direction of travel is usually basically the same as Nationwide or the ONS or any other house price index. So in this case, it was the biggest July fall on record, because asking prices usually fall in July because it's just a seasonal thing. But this was the biggest amount they'd fallen in the month. And
what
also meant
what was the number?
Okay, it was like 1.8%.
Okay, so it sounds very little, but annualise that and you've got a real number.
Yeah, you basically annualised obviously, but also the annual rate of growth is down to 0.1%. So basically prices being flat.
Or falling in inflation
Or falling in
terms.
inflation after inflation. And the interesting thing about it, I guess, is that activity in the market is basically normal. Put it this way, in 2022, when interest rates went up, we had a big crash in transactions, but prices kind of just trickled down a bit. Whereas now, transactions are basically back to normal, but prices aren't going anywhere. So it feels as if maybe just the market's waking up to the fact that, well, actually interest rates are a lot higher. People can't afford to pay what you might have wanted them to pay, and we're just getting that gradual adjustment.
And prices have actually fallen quite a lot in central London, right?
Yeah.
And we keep hearing about, particularly at the top end, prices are way off. I mean, it's hard to get precise numbers on this, but when you talk to people about premium properties, they'll tell you that prices are down 20% plus.
And also that they haven't moved since like 2014 or something like that. I mean, it really is. I don't think this is even a particularly controversial or surprising thing to say anymore, because I've heard it so much. In fact, I even saw somebody putting out quite an interesting wee contrarian view the other day, that maybe now would be a good time to buy prime central London property, because actually it hasn't gone anywhere.
Prices haven't gone anywhere for
and
so
in real
long
terms
now.
It's down a lot.
Yeah.
I mean, I don't know. I mean, I think you can point to lots of different reasons for that, but it's hard to actually pinpoint a specific one beyond. I mean, I guess it was a big beneficiary of capital flight, which I think people forget. I think that after the Eurozone crisis and the financial crisis, and also that was the time when Saudi Arabia particularly was cracking down quite aggressively on its richest people. And I seem to remember there was an awful lot of capital flight from other parts of the world into prime central London, roughly up until about 2014. And then obviously there was a lot of changes made, stamp duty, etc., Brexit. You know, you can argue whether that was helpful or not. I mean, it made sterling go down. You would think it would actually have encouraged more people to buy. Cracking down on buy-to-let. So I guess there's a lot of reasons why that area might have suffered particularly. Yeah,
and we hear a lot at the moment, don't we, about how Americans are moving to the UK. Have you heard that? Americans are coming to the UK, they're coming to London, they're coming to Scotland a lot. We keep hearing that.
Really?
I keep reading this in the papers, and then I ask around in Scotland, and not so much.
They do love their taxes, the Americans, so I've heard.
Well, what happens is that they come to the UK and they think, well, they'll buy a house in Scotland or possibly in London, and then they find out that it's classified as a second home because they're keeping their apartment in New York or wherever it is, and the stamp duty is absolutely horrendous. So I think you're less likely to see people buying property in the UK when they see the upfront cost of doing so. And then, of course, we have the constant story that we hear, and numbers will become clearer over the next year or so, of people leaving the UK at the top end, and that will bring some sales through, right?
Yeah, you would think so. yeah, maybe it's the time to buy if you've had your heart set on the prime central London
John's
property.
finally moving to Notting Hill.
But yeah, exactly. I want to live the Hugh Grant dream. But no, I don't know. I struggle to feel excited about that as a trade, even though maybe it is. I don't know.
Anyway, you were mentioning earlier we were making a final version of a podcast on housing market to go with our series on housing markets that's coming out in a few weeks, and you mentioned in it this correlation that you've seen, or lack of correlation, between transactions and spending on refurbishments. Yeah,
well, this was something that popped up earlier this week, and it's not something. It was one of our Bloomberg colleagues that wrote the piece, but I think it was according to data from Savills, the number of home renovations getting done is like at a 10-year low. And it's basically, because usually what happens is you expect, it's planning permission for important stuff like, changing, like extensions and things like that. And obviously usually that kind of roughly goes in line with transactions because people move and then they do stuff. So it seems that people are now moving but not doing stuff. And Savills kind of puts it down to people they sort of suggested that it's because there's more supply on the market, and so people are more readily able to choose kind of oven-ready properties, the ones you can just move into. But I think you could also look at, clearly, people are having to spend more to get into a property because interest rates have gone up. And also, the build cost inflation in recent years with COVID has been nuts. So I'm guessing that the kind of like implied value of doing a renovation is much, much lower than it was maybe 5 years ago.
I don't know, might it also be that there isn't a house left in the UK that hasn't already been fully renovated? We've been watching these programmes on the telly for decades. Is there a house left in central London, for example, without a conservatory out the back and a side return? And I wonder if that's not something to do with it. It's almost given how few new houses we build every year, given that the housing stock remains kind of static, given that turnover is reasonably high and renovation has been on the go for forever. It's all done. Literally, there's no one left who needs a conservatory.
Well, yeah, and also people did spend a lot of money on their houses during COVID. So I can't imagine.
Could just be a lull based on that.
It's an interesting thing to see. But you're right, there's a lot of different reasons that it could possibly be for that.
Okay, well, there we go. Here's your chance. Now's the time to go out and buy a house, preferably in central London, that is pre-renovated because there's millions of them. Right, John?
That's
excellent.
It.
And John's now moving to Notting Hill. Thanks for listening to this week's Merryn Talks Money debrief. If you like our show, rate, review and subscribe wherever you listen to podcasts. Also be sure to follow me and John on X or Twitter @MerrynSW and John_Stepek. This episode was produced by Sam Asadi, production, support and sound design by Moses Ander. Questions or comments on this show and all our shows are always welcome. Our show email is merrynmoney@bloomberg.net.